Good evening. This is Rodney with the Triton Wave Market Outlook for Monday, November 19th, 2012. All right, let's jump right in. Look at the S&P futures here, the ES on the daily. Now, it hit my original target of 1365, and I had a new target of 1330. On Thursday it came down, and on Thursday evening for the Friday video, I warned that there may be a short covering rally on Friday, and it was from the close on Thursday, it was down, let me see, about 10 S&P points before it had this crushing 20 point rally, and now in the evening at 8 o'clock Central Time on Sunday, it's up another 400. So I warned, or I suggested, that when T5 goes below 0 on this first hash mark, after it's had succeeding moves to the downside on T1, T2, T3, T4, that there usually is some kind of a rally. Now, what does this mean exactly? There's really nothing in the economic picture that's changed. The Democrats are agreeing with the Republicans that they want something done before we go over the fiscal cliff, and that provided the impetus for this short covering rally of 20 points, now 25 points on the S&P. We're slamming right into the 8-period exponential moving average, and this trend line about 1371, which is about another the 8-period moving average is 1368, and we've already almost been there. We've been to 65 today. This is 68. It could do a rally into Thanksgiving for the next Monday, Tuesday, Wednesday, but that would put it up to 1384. And I don't think it has the stuff to do that. I just don't. I think it's gonna peter out somewhere at 1372. I may be wrong, but the way I see it, 1372, it may possibly go up to 1380, which puts us another 20 points higher, and then roll over. But this is not the place to get long. My target for this remains back at, well, the 1330 levels is like an immediate target, but you may have to wait a couple days for that to happen. But I still think it's coming down to the to this major trend line of 1267 that goes all the way back. That goes way back. It's support and resistance for about 5 or 6 years. So let's just do this here. So this is where we are. It's just playing with the 8-period EMA. So we'll see what happens. Let's move this over, and I'll show you some daily charts. One of the hints that this was going to move up there was on the A wave of the ABC waves, if you have those and you're trading them. That happened in the middle of the day on Thursday. It gave you a hint that it was going, that when it popped up, the next time it went down, if the cash was a lower low, but the wave was still above 0, that is definitely a buy signal. And you can also see on the wave down here from November 6th, that's one major one down here to November 8th, and then November 15th. There's non-confirmations on the B wave. So lower lows on the cash, higher lows on the wave. And what this looks like on the Triton waves is the same thing for T1, T2, and T3. And it moves above 0 also. Actually, the A wave gave you a little bit better warning because it's a little shorter term. So if you are doing intraday trading, let's look what the intraday looks like. This is Friday's close. If you were just trading Let me see here. Net. Okay, this is not in the 1597. You have to know just by observation wasn't in sync with the cash prices. So here we are at 828. It went down below zero. This is T1. Goes above zero. 909 at the bottom, below zero at the top, above zero at the bottom. Let's see what this looks like on pretty much the same thing on the B wave. You can track that on the B wave all the way down. The blue wave here, the pink wave here, the blue wave here, and you're basically still long on B wave, and you're long on T3. So whichever way you want to play it, whichever wave you feel comfortable with, that's the one you follow. And we'll take a look at it again on Tuesday and see what it looks like for Wednesday. So, all right, taking a look at Apple really quickly. Apple hit the target of 513, and this call was made all the way back at 6:48. So my target was 513, 130 points ago. We hit the target. It went a little bit below it to 506, and it started bouncing up with the news of the Senate congressional heads meeting on the fiscal cliff. So Apple could short squeeze a little bit further up, 545, 550, and then since all the waves are down below zero except the main key wave of the blue wave on Apple, then I see a max on this of 564. If it hits 564, short it. Okay, 564 puts us at the 233 exponential moving average, and by the time it gets up there, it'll be the 21 period moving average. So if it gets there, if it gets anywhere close, it's re-shortable. On the daily, this is the hash mark for Friday, beginning of Friday, and after this long move down, let's see what this looks like on the daily here. All right, well, this is about three days. You can see on the daily on the left, 3 days move on the downside, and so you basically want to ignore the shorter T1, T2. But if you look at T4 right here, it turns right there at 10:49, and that's just about when the congressional meeting got out, and they started discussing discussing the fiscal cliff. So actually, Apple did a 20-point turnaround. So there may be a little bit follow through. It may only go up to 540, but just beware of it. The possibility is 560, 565. I personally don't think there's going to be a lot of follow through because I didn't like the action of the Dow and the S&P after the announcement. There was like a ricochet, like a slingshot to the upside from the downside, and then it just stayed there all day long. There was no continued follow through, so we'll have to see what the rest of tonight does and how it opens tomorrow morning. It might just be lame and then fall over again. Okay, Goldman I now like to the downside. Since it's been 2 days, the T1 on the daily has gone below zero, and there's a little shuffling after that huge move from 126 down to 114. It's kind of bounced back a little bit, about a third of the way up to resistance at 118, fell back over, and has really done nothing but gone sideways. T5 can't get above zero, T4 can't get above zero. And let's take a look at the ABC waves to see what this looks like. And it's basically the same thing. You can see the bounce on the A wave here, and then down again at 117, and then up again when it crosses back over zero. But you don't want to take these long ones because T1 is now below zero on the daily, and the 8 is crossed to 21 up here, and they both are about to cross the the 8 period moving average is about to cross the 55 and the 377. Not a very good sign for Goldman Sachs. So I like Goldman here down to, well, I have a trend line all the way down to 96. I don't think it's going to hit it all at once, but I do think it's going to hit. Let me see here. Let me just cinch this up a little bit. Major support, where it took off here, 104. I think 104 is a pretty easy target for Goldman. So 11 points away. Nice short or put position on December puts. Amazon is now a short candidate. T1, 2, 3, 4 is now down below zero. It happened since the last update. The last T4 has gone completely below zero, and T5 has already been below zero. The subwave, the light blue one, for about 6 trading days. So that's a good candidate for the short side. It did, however, take off. I didn't play it because it took off too strongly to the upside, and then even when the market retraced, it stayed up strong at $4.50. So I kind of like, let me see what Amazon looks like on the 610. Nope, nothing there. Alright, it's basically shortable anywhere from 226 all the way up to 230. So if there's any move to the upside on Monday to the 228 to 230 area, that is shortable on Amazon. Let's take a look at one more before I let you go. All right, lastly, let's look at Google. Google, I have a target of 619 for. All the waves are moving in nice synchronicity below zero. And actually on Friday's action, Friday's action went below zero on T4. So if we look at the big picture here, we could even draw a trend line. Let's see what that looks like. Okay, so the trend line on Google puts us at least 619 and possibly 600. Let's just call that 600. And it was all over the place. It had a 17-point range on Friday. So if it pops, if you can see by the 21-minute chart here that even when it pops above zero, it doesn't go very far. Most of the move is to the downside. Let's see what the ABC wave looks like. Kind of the same thing. When it goes to the downside, when it moves to the upside, it goes mostly sideways, and when it moves down, that's when it makes its big moves. So the idea is not to play it to the upside. If you are lucky enough to see this pop up to 675, which I seriously doubt is going to happen, but anything's possible. Maybe 670, which is 23 points away. It's possible. It's not likely. We've got a lot of problems out there, both European Economic Union, fiscal cliff in this country. There's a lot of retail unrest about how this holiday is going to turn out, and that I'm not looking at fundamental information, but only how it's interpreted through price action. and this is the price action that I am seeing. So have a good evening. Enjoy the rest of the weekend, and I will see you at the next update.